Welcome back. You're watching Stockwatch with me, Juliette Televi, and joining me to take your stock-related questions this evening are Nader from Benguela Global Fund Managers and Graeme Körner from Körner Perspective. If you'd like to send questions, please email stockwatch@bdtv.co.za or SMS us on 41392. Graeme, good evening to you both. Graeme, if I may start with you today, not a particularly good day for the JSE, but that must be seen in the context of yet more politically induced market ruckus, and this time not in emerging markets but in the European markets, thanks to the European parliamentary elections, which I never really thought amounted to anything much. There's no legislative function in the European Parliament, but the swing to the far right seems to have everyone spooked.
Yeah, Juliette, good evening. I think exactly right. When we looked forward in the beginning of this year to the year, and we took the big picture view, and we said more than 50% of the world's population was going to the polls, and over and above that, of course, the European elections, not national, and it was the one thing, and the other thing was, of course, this kind of jump to the right that we've seen globally. It's not just France, where obviously Emmanuel Macron has now tried to he's called the snap election, I think, as a way of trying to fend off Marie Le Pen and the let's call it the further right, and equally in Germany, of course, Scholz also under pressure, and we've seen what's happened in Italy and even parts of Scandinavia. So there seems to be a strong thread, and suddenly people are quite anxious about policy continuity. So it's not just us who are wrestling with this sort of pull. I've referred to it as the disappearing center. You've got quite a big jump to the left, and you've got a jump to the right, and that what I call the sensible center, which is where things happen, just seems to be smaller and less vocal than they have been for a long time. So, you could see French markets set the pace. They were down almost 2%. They really don't like the prospect of this, because I think they fear that maybe Macron is more bold than sensible, and maybe he'll live to regret this, as may the French population.
Yeah. Yes, Mr. Akebe would be interested, the centre not holding here. Grant, ultimately though, does this have much bearing on any of your investment decisions?
Not that much. I think it's a good question, Juliette, and you need to think carefully about, is there likely to be regulatory change of substance? If you have a strong constitution, if you have strong pillars in the judicial system, etc., in these countries like France, even if you have a change of party, it's hard for them to implement significant and structural changes that impact a normal, high-quality company that operates, because the world goes on. It's like, sad to say, it's like when you have these war events, Russia, Ukraine, etc., everyone shocks and panics, and more often than not, it just presents an opportunity to buy good businesses at a decent valuation. So one does need to be careful. If, for example, in South Africa, we had a shift in leadership that we know is going to skew things in a certain direction, it might impact the sensitive, like the financials or the banks that are sensitive to the rand and sentiment. So there are pockets of exposure, but the general, your consumer staples, your sort of maybe your technology firms, there are companies that just go through this kind of noise and give you opportunities in this kind of thing. It's very difficult to pre-position for this kind of political movement here and globally.
Yeah. While we wait for questions to come in, and I see there is something on capital appreciation, and I will get to that, and please send your questions to us via email or on our SMS line. There were quite a few results out today to chew over. Grant, actually Graeme first, and then Grant. What did you make of some of the numbers? Things like Omnia, Alex Forbes, Oceana. Omnia, Graeme, was quite interesting in that the results overall weren't particularly impressive, but they've decided to pay out a special dividend. So was it surprising, not surprising then, to see the shares rally about 8% by the close?
Yeah, Juliette, so much of our market, and we've had these conversations for months now. If you look at Omnia sitting on, I think, a multiple of 7.5. So, it hasn't been an easy environment from many angles. So for a business to actually just mark time, when you're trading on an 8 multiple and you're generating cash and you're returning that cash to shareholders, eventually people just say, okay, well, how cheap is too cheap? And I think that's really what is really happening. I think, Grant was saying, and I think he's right fundamentally, that you mustn't get sucked into the emotion of politics. But I think South Africa's had this sort of damp cloth hanging over it for a while now because of the anxiety around policy certainty and whether we will remain, well, we're not really, but how fiscally prudent will we be? So I think the South African equity market has been under a little bit of selling pressure and anxiety about politics. And my sense is if that was to go, for example, it could see people suddenly saying, well, jeepers, 8 PEs on good companies, especially when the outlook is improving. Maybe interest rates are coming off, some of the input pressures that you've seen, price pressures that these businesses have had to absorb in a variety of areas suddenly start abating. And suddenly you get to from a very somber outlook and everybody being very worried about SA Inc., things can change quite quickly. So I think that's the best I can do, that markets have really priced in pretty dire scenarios, and we almost expect the worst of a lot of these companies. So when the results are not appalling, then I think we sort of reward the management for doing a decent job in a lousy environment.
Having said that, Grant, Omnia is quite a cyclical company, so taking that into account and maybe the sort of extraordinary amounts of pessimism that have kept a lid on any exuberance in the South African market. That aside, is Omnia something that you would consider at this point?
So no, I personally wouldn't consider it at this point. I think they are doing a good job with what they have. As Graeme said, it's a tough environment. They're operating, they're managing their cash well. They're struggling for growth because the growth isn't there from the customer side. The demand isn't there. There's price pressures on the commodities they're involved with. So I look for something where the company itself can drive some kind of earnings growth, or there's external factors that look likely to drive that earnings growth. And until I see that, it doesn't attract me to just buy companies that are just cheap for the sake of being cheap. The risk of being a value trap sort of pervades those kind of scenarios. So it may well be a good opportunity, but I'd need to see some prospect for improvement, some sort of growth before there's any urgency to buy one like that.
Yeah. Okay. What about capital appreciation? The viewer says that they came out with the panel's view on this company after their stellar full year results last week. There've been a couple of questions of the last few days. Graeme, going back to you, did you think? I
had a look at them some time back. I mean, obviously it's sort of a big part of it is in the payment space. It definitely has, turned a corner. The question that I would ask is how sustainable is that? Because there's a lot of competition in that space. I think, payment portals and the like. So I think they're doing a good job, but I'm not close enough to really offer deep comment. But I think I'm worried about that kind of business and the sustainability of that earnings growth, given that there's just so much happening in that sort of payment space, which I still understand to be their core bread and butter.
Yeah. Grant, your thoughts?
Yeah, I think it's quite a good little company. They've actually surprised me on the payment side. I agree with Graeme, it's fiercely competitive in the fintech space. They've actually surprised to the upside. They've done really well there. And I think they've underperformed on the software and services side, which is a bit of a disappointment. But they have got a good management team from the exposure that I've had, or from what I've read as well. And I think it's a good little business. I think it's inexpensive. And I think in line with what I was saying earlier, I think they do have a path to growth if they can drive that software side of the business, and the payment side. They have some technological products and offering that they're developing overseas, which could drive some fintech solutions there. I mean, I'm not close enough to say with certainty that they're going to grow strongly from here, but I think the prospects are there for those who are willing to roll up the sleeves and have a closer look.
Okay, what about a company called Powerfleet, which I think, is that the old mixed telematics? If we're talking sort of vaguely fintech, I think think it is, which is a merger, Mix and Powerfleet. They're going to be included in the Russell 2000 index, which is, I suppose, a broader index in the United States. Now, there is one company that has maximized the use of words that are of the moment, like. And it's no longer the Internet of Things, it's artificial intelligence of things and software as a service. And there's a whole lot of gumph in the announcement, but I wonder what either of you make of it. Graeme, is this a company that you look at, and does it excite you that it's going into the Russell 2000 index?
Yeah, well, everything as a service, isn't that the new thing? So, yeah, look, I think when small, no, that's clearly not that small anymore if it's going into the Russell 2000. But when companies that particularly are tightly held move into indices like this, it can actually cause quite a jump in the price. So I haven't had a look at the register for a while, but I think it's the kind of stock, even though it's a small part of the index, it could actually at the margin have quite an effect. I mean, something that we haven't really spoken about is, European markets were a little bit soggy today, but if you look across the pond, the Russell 2000 was down a touch, and I think over a year is only up about 7%, whereas the Nasdaq is up a third. And I think that tells you that there hasn't been a lot of demand for that. But my sense is that, maybe a year or 18 months from now, suddenly everybody says, well, there's good value in smaller caps, and they will be beneficiaries of lower interest rates, etc. And you'll probably see good flows, and those flows will have to allocate money into it. So, yeah, I'm skirting the issue around the artificial intelligence of things and, AI as a software as a service. But I think just from a tracking point of view, it could actually be quite good news for existing shareholders. But whether it's merit to get involved, I would say no. I think the share price could be quite volatile if it is included in the index, but it's not a reason to buy it.
In fact, the shares were down. And the ticker, if you would be gratified to know, is Artificial Intelligence of Things, AIoT. Grant, I don't know if this is a company that you would have looked at or would look at.
So I don't look at this one for a long time, but I have looked at CarTrack, which in my opinion, was the better of the two. They both do tracking, as you know, and CarTrack has done a far better job, and it's a really good business because you do have a subscription, you have a recurring income stream. But Mix, I think, have struggled to grow their income over the years or their user base, unlike CarTrack. So I haven't been enthused with what Mix has done with their potential that they had from 10 years ago. But perhaps Powerfleet, which is an IoT specialist, from what I understand, perhaps if you put the two together, they do have a lot of data. And really, what does AI enable you to do? It enables you to glean insights and understanding and make decisions that were better than before using data. So they've got all the right building blocks. I'm not sure, and I'd like, the time will tell whether they know what to do with them. So for me, no, it's not one I would buy just because of its inclusion in the index. Okay. However, the potential seems like it's there, but you'd need to see some execution because I don't see a track record of execution that would get me excited.
Okay. Graeme, we were talking about matters of artificial intelligence and Internet of Things and software as a service and fintech generally. And there was a question that came through, and I suppose it's sort of related, on Friday night, asking whether you would buy Purple Group, which of course is the owner of Easy Equities, which I guess you could call a fintech success story in South Africa, or the JSE. Graeme, if I may start with you, they're not strictly comparable, but I can kind of see if you were playing a re-interest in the South African market, which do you think would be more leverage to that?
Well, I think Purple is trying to extend beyond the South African market. That's the first thing. So their Asian expansion could be very, very exciting. It could eclipse the South African business. So I think the JSE is battling for relevance, if I may say. You've seen, this wave of delistings over an extended period of time, and you've seen some of the other secondary markets eating their lunch, so to speak. So the question is how is the JSE going to move the needle going forward, especially in a more competitive environment? But you can't really compare them in the pure sense. So I would add another one to it. Well, let me finish on Purple. I think Purple Group is in a way like Time Bank, and obviously, there's some linkages in places as well. But for me, Purple, the big value sits in the client base, and there was a big bun fight about the fact that they wanted to start charging dormant accounts, etc., on easy equities. The point is that base has value, and if you look at what they're doing, they're moving beyond just listed equities and fractional ownership. So I think that stuff is quite interesting, and if they can get into other Asian markets, that looks quite appealing for me. If I may add another one, if somebody's saying, so I think if you believe in the potential of that Purple client base and in the technology, I think it's actually quite an exciting opportunity. But I wouldn't say it's binary, because I think they've sufficiently capitalized and they've cut the spend, particularly on the development. For me, the JSE is just I can't get excited about it. If you want to play the JSE, I would say go and look at something like Coronation, for example, where you're going to get leveraged performance if the market does well. So, yeah, I would go that way.
Grant, how about you?
Yeah, I think Graham's point is well made. The JSE, unfortunately, is a little bit of a value trap. There's more delistings than listings. Liquidity's reducing. It will benefit if we see a new bull market, if we see a resumption of positive outcomes in South Africa, GDP growth surprise, political outcomes, etc., and the market activity increases and foreigners care again about South Africa as an investment destination. I think the JSE will do well. In the absence of that, it's almost a value trap. You're going to park there, you're going to get a decent dividend, but they're struggling for growth. Purple has been trading more expensive. I don't know where it's trading now. It got a bit ahead of itself a year or two ago, but it is quite an innovative business. I think the upside potential is much greater, but yes, you have more uncertainty and there's a higher risk profile for sure. So depending on your risk appetite and why you're investing, you're not going to get paid your 8% dividend yield you're going to get on the JSE, but you're going to get the growth if they get Southeast Asia right, or, and that sort of thing. So completely different prospects and decision and risk tolerance involved here. I think, yeah, I'll probably lean toward Purple, but if I only had the option to buy two stocks in my portfolio, I would probably buy the JSE as your sort of underpin and don't throw all the money into Purple because of the risk characteristics of it. Slightly riskier. So
yeah, fair enough. Okay.
Blend the two.
And then a question on TFG, which had a huge share price jump on the back of its results that were released last week. The viewer asks, can your panel give a buy for TFG? Grant, sticking with you, is this the retailers have had quite a recovery, interestingly?
Yeah, they have. The retailers have actually had a decent recovery from the lows. And I think if you look at TFG and some of the others, they are still well cheaper than their historical average in terms of valuation where they've traded. So you could make a case for them for still being value there if you look at where they historically are. We all know the challenges SA consumers facing. I thought TFG did a very good result. It was flattered somewhat by poor comps. So they had a lot of inventory issues in the prior period that have now come through the system that helped the margin recovery. They did well in the UK. Australia's under a little bit of pressure. So I think the story is sort of unchanged. If you think the macro is going to improve, if you think the GDP growth is going to improve, I happen to think so. I think we're going to see better load shedding outcomes. We're going to see that feed through into the economy and the consumer when we see rates cut. I think you can own the retailers, and I think Foschini wouldn't be a bad bet if you have that larger perspective. I think in its own right, it's going to struggle to kick on from here because the margin pressure will resume. And the challenges around growth will be there unless something changes on a larger scale.
Yeah. Graeme, your thoughts on Foschini and indeed the rest of the cohort in the retail sector?
So a little while ago, one or two results from the clothing retail or the apparel retail that's really caused a sell-off across the board. Foschini and Truworths were taken along in the slipstream. And, I said, but this is daft. So I'll qualify it and say we really like the business. We think it's really well run. We like the breadth of they've moved a little bit more into the lower LSMs where I think they were underrepresented. Also, the acquisition of Jet, it was perfectly timed. So we think it's an incredibly well-positioned business. It's a well-run business. And they've got mojo. It's not like they just sit back and say, okay, well, let's see if we can get the seasons right. They're doing stuff. Of course, also the international operations, are worth noting. So I think we like TFG. We thought, even still at 103 Rand or 104 Rand, it's still reasonably cheap. My sense, though, is there's been good news. I think a few people were probably overly bearish and were caught a bit flat-footed, so there might have been a bit of short covering. We like this business very much. We think it's going to do very, very well. And if you just look, for example, at the banking kiosks that they're rolling out with TimeBank, for example, lots of innovation. They're trying things, and I have to be honest. My sense is generally in the apparel retail space in South Africa, people aren't trying a lot. They're just sort of going through the motions in many ways and trying not to mess it up. So yeah, we like it very much. We think it's a really good business, and an 11 multiple. Not a great dividend yield, but at least you're being compensated. So yeah, we like this business very much, but I wouldn't be surprised over the next week or so to see it give back a little bit after the jump.
I mean, they have done some really. They've done a lot for manufacturing in South Africa. Actually, they've relocated a lot of their manufacturing operations, and that's really, and it's good for them. It's good business for the country. It's good business for them because they have shorter lead times, and they don't have a kind of a horrible stock situation as you might have had during COVID, for example.
Absolutely, because they're able to bring capacity online quite quickly. So if they suddenly, find skinny jeans are doing fantastically this year, they don't have to say, oh, well, we missed out on the opportunity, because they can actually open that production capacity quite quickly.
Yeah, I'm afraid skinny jeans are only popular in the Department of Health and small pockets worldwide. It's wide-legged jeans, Graeme. Okay, gets with the fashion program. Before I get to your stock picks this evening, just a quick question on Rainbow Chicken. They came out with the prospectus today. They're already listed as Rainbow Chicken, which I have to say confused me a little bit, and the shares were up 8%. So, Grant, I don't know if you had a look at this, if it's something that you would consider alongside, say, an Astral Foods, for example, or a Quantum.
I did have a brief look. I'm not that close to it, but Astral, I think, is the better of the two operators, a better quality business, and it's shown that over 10, 15 years. These businesses are they're highly volatile. There's so many uncertainties that have nothing to do with the management or the company, whether it's avian flu or whether it's feed prices or imports from Brazil. It's such a tough business. I don't get excited about the industry at all, purely because there are so many things that the company itself doesn't control. So, and I looked even over the last 3 years, they made money. They lost money 2 years ago or 3 years ago. Then they made a little bit of money the next year. Then they lost money again. And this year they're going to make a little bit of money. I mean, it's hard to invest with that kind of volatility in earnings with any confidence. So, it's not. I don't get enthused by it. So I would stay away from that one.
Yeah. Graeme, I don't know if you have a very quick comment there. Or if you'd rather go onto your stock pick this evening.
I think Grant is right on the money. That's, I see no reason to be in the chicken producers in South Africa. The only additional comment is they are always vulnerable to, politics, being part of BRICS and so on, which, they're almost like a pawn in the game. So no, I don't like the chicken producers at all.
Yeah. Okay. So Graeme, sticking with you, what is your stock pick this evening?
Well, I mean, if you take the flip side to this, we've been talking about value in SA. The banks obviously came off after the ANC lost its majority, and then so if you look at somebody like Absa at about $150, what Grant was saying, guys like us like businesses that generally produce. The accountants, IFRS makes noise of financial statements, but generally this business is probably on track to give 25, 26, 27 rands worth of earnings this year. The outlook next year, early-ish, should be for lower interest rates, which would take the burden off some of those non-performing loans. You're getting almost a 10% dividend yield. If you take, I think, 14 Rand 80, it is on $150. For getting dividend withholding tax, you're getting almost a 10% yield. So for me, it's almost like you've got a free call option on this thing. You're being rewarded with a yield after DWT, roughly what you're getting on cash. So yeah, that's absolutely for me. And I think the sector generally is ripe for a re-rating when those foreigners that Grant was telling us about come flooding back into our market.
Yes, let us welcome the big stampede home with open arms. Grant, how about you?
So I'm going with a stock by the name of Autodesk. Now, they're one of the original computer-assisted design developers. So they provide software to enable engineers to design whatever they're designing. And they also play heavily in road, rail, water infrastructure, etc. I think they're perfectly positioned to capture some of the narrow AI evolution. So in other words, they've got a huge data set, 30 plus years of detailed information of building projects and data that they can train their own models on and push out into like a connected cloud live feed into their client base. And I think it's a really exciting business. It's cheaper now than it's been in a number of years. It's not cheap, but I think the growth runway, if you're willing to be a little bit patient, it's a great company. And I think if AI unfolds as along the lines of what we think it can, this will be a good one to own, I think.
Okay.
So that's Autodesk.
Right. Yes, and if AIoT is the ticker du jour, then why not? Grant, Graeme, thank you very much for joining us this evening. Nice to chat to you both. Grant Nader is from Benguela Global Fund Managers and Graeme Körner is from Körner Perspective. And don't forget to tune in tomorrow at 5 o'clock for the JSE's Stock Picks event, where South Africa's top market watchers will be giving you their best stock picking tips. But until then, stay tuned for lots more coming up right here on Business Day TV.